Budget 2010 brought to you by Harith Fund Managers.
We're talking about small to medium-sized businesses, and they didn't really get a mention, and clearly this is what we need to be focusing on in South Africa if we are going to start spreading out wealth in the country.
Absolutely. You know, it's a key issue and a terribly vexed issue for the ministers of finance as they come and go. You can't create jobs by creating a fund and throwing money into the fund. Remember, many years ago there was this Umsombomvu fund. That a billion rand was put in by government, R1 billion was put in by business, R1 billion was put in by labour. They were all competing to put money into this fund. I sat at a breakfast with a treasury person. This goes back many years, and I said, how do you create jobs by throwing money at a problem? Well, the answer is you need to get a fund that is able to assist SMEs to get financing. For the Cooler Fund, for example, there's been a bit of a de-emphasis of that fund at the moment. You don't hear much about it anymore. But it was quite popular at some stage. I think they had some administrative problems, and there was a change in that fund. But it would stand behind loan funding by banks to an SME. So an SME needed money. The bank would say, well, I can't lend you any money because you've got no collateral. This fund would stand 60%, 80% collateral behind that fund. Then there were strings attached. The SME owner couldn't sign the checks on his own. There would be a mentor who would co-sign the checks with him, and there would be a mentor to help that person with business skills. Now, that makes a lot of sense to me, and I think we need to look at that a little more in more detail. For example, what's happened to the Msombomvu Fund? What's happened to all that money?
Well, Adam, just looking at the way that Trevor Manuel handled small to medium-sized businesses, they also got a mention during his budget speech, but no real focus on it this time round. Would you like to see more detail on that front, perhaps a little bit of a focus on the sector?
I think, you know, given the financial constraints that the minister had, I think he didn't have much flexibility in allocating additional resources to sectors like this. In most economies, your small to medium enterprises are really the engines of employment growth and economic growth. And from a long-term strategy point of view, we really need a framework to encourage and develop small and medium enterprises, and providing the infrastructure and the support that they so desperately need to see them through their first couple of years, and then to provide them with the sustainability going forward. So from a long-term policy point of view, I think the Planning Commission really needs to focus on this area so that we get a really constructive framework rather than these hodgepodge funds that have been set up. Most of them have failed and haven't really delivered on their objective.
From an economic point of view, Annabel, clearly every part of South Africa's economy needs to start flourishing, and we need to focus on that sector.
I think this is really key. You know, this really drives to the heart of the problem, because we do have a very big debt burden hanging over South Africa, and we would obviously need to fund this. And I think what would be the best path forward really would be if government can actually, or if South Africans can actually be drawn into the economic net, and sufficient jobs can be created so that the revenues can come from taxes as opposed to necessarily from borrowings, and also as well that would reduce the social welfare burden that's being placed on South Africa. So that really is the heart of the issue, to try and engender sufficient growth and the ability and the environment for growth and job creation via business creation, to actually then make our fiscus, our government finances, a lot more sustainable.
From an investor point of view, James, looking at some of the sectors that will be impacted by the budget, construction is one of the positive points. What about the negatives? What stocks would you be staying away from just by taking a look at these numbers?
Yeah, I think you've got to be very careful of the discretionary consumer side of the market. The consumers are going to remain under pressure going forward. His take-home pay is going to continue to be under pressure. So anything on the discretionary side is probably going to remain under pressure going forward. But certainly on the infrastructure side, it's going to do well. Short term on the hospitality side, given what's happening with World Cup, we should get a good boost there. But the prognosis post World Cup is particularly worrying, as I say, on the discretionary consumer spend side.
Annabel, the effects of the Soccer World Cup, the 2010 Soccer World Cup, Pravin Gordon says it's going to be relatively positive. Others a little bit more bearish, saying that we could be seeing prices remain inflated for some time to come. And the money that we've pumped into the Soccer World Cup was really warranted.
Well, I think what's really concerning is the Soccer World Cup takes place over winter, and that traditionally is a very high usage time placed on electricity supply in South Africa. So while we would expect to see some revenue generated from the World Cup, there is the concern that we're not going to be able to provide uninterrupted electricity supply throughout the period, and that we might actually need to draw some of the electricity production away from industry and feed it into the retail sector, specifically into the hotels, the bed and breakfast areas, and to keep these stadiums going. So that could put a little bit of brake on economic growth, on GDP production over that period, and one would hope it would not be to the point where you would need to cut back 10% of production on industry, but obviously that is the concern. If you look at the benefits coming from the World Cup itself, well, the biggest item spent on any of the visitors will really be the aeroplane ticket, and that aeroplane ticket's revenue will stay in the country of origin. So, you know, when those individuals do come to South Africa, they're going to be relying on the retail spend in the country, but as I said, there are concerns which could mitigate against this as well. The jobs that are created over that period also are likely to be temporary jobs. They're not going to be sustainable thereafter, and of course the infrastructure build-up and spend that has gone into those stadiums will obviously come to a halt as well. So there are a few negatives as well attached to the World Cup. It's not going to be a solely positive event that's going to roll forward. But on the other hand, you are going to, one would hope, have the benefits to the South African economy, South Africa as a nation, from a successfully carried off World Cup, and particularly have return visits from tourists to South Africa, which would hopefully boost our tourism sector and our export earnings.
Adam, just looking at the possibility of electricity interruptions during that period, we already know that there is a tariff increase looming. From an investment perspective for you, Adam, are you staying away from companies that have a big exposure to electricity demand, like, for instance, the resource companies?
Sure. I think we've got a long-term problem in South Africa in the resource sector. Our mines are getting deeper, and they're also moving further away from their shafts. And with that, you need a lot more electricity, so they become a lot more energy intensive and labor intensive. And most probably what we should be focusing on, and what surprised me, was there wasn't greater focus on the real lifeblood of this country, the Richards Bay line and the Saldanha line. If we could get that working, and it's low energy intensive resources like iron ore and coal that we can export, and stop the deep level mining, and also the aluminium smelters that we import alumina, we use cheap electricity, and we export aluminium. We don't create many jobs. So that sector would be a sector that is in long-term decline, and the rise in electricity prices will just speed up that process.
52 billion rand allocated for public works programs, which is obviously going to be divided between Eskom, Sanral, and of course Transnet. How do you see that playing out? We know that Eskom obviously needs the biggest funding here.
Well, that's it. Eskom's clearly going to get the lion's share of that. And heaven help us if the lights do go out during the World Cup. From that context, if one looks at the benefits of the World Cup, picking up on Annabel's point, there are direct benefits associated with tourists coming to SA, and the direct benefits associated specifically with each event. Try book a hotel room in Cape Town now; you simply can't do it. And as we know, Cape Town's horribly oversupplied on the hotel room front. But it's more the long-term effects. It's more the benefits associated with South Africa successfully carrying off one of the biggest sporting events. That is where the true benefits are going to come through on the long-term basis, in terms of FDI coming in, focus on SA as the sort of entry point into Africa. And if we have the lights go off during one of the matches, that's going to be absolutely horrendous.